Very good morning to you. Welcome to Trade Live with IG with myself, Rich McDonald, and
Ronnie Agnig.
That's the one.
Your favorite co-host, right?
My favorite on a Wednesday in July when there's a number 16 in front of it.
So I'll take it.
We've got, whoa, who bought at 6,300 yesterday? Go on, who bought from me? Smashing those futures out when that inflation number, 0.3% inflation month on month, and a higher than last read, and people bought the futures on it. Are they mad?
Seems like they are. And it seems like Daddy Trump is also mad, but we'll get into that later on.
Jamie Dimon not happy with them. Right, let's look at what is getting up, coming up on today's show. Who's getting up? Here he is then, Ronnie the man. You're doing fast markets with Angelina. I didn't realise that.
Nor did I.
All prepared for that, Ronnie?
Yeah, I mean, as prepared as I can be, you know, I'll do my very best.
It's because Axel Rudolph takes over at 8:30 on to charting crypto. And coming up 9 o'clock, of course, we've got those all sessions. The futures looking down 20 basis points again. It's exciting me. Can you tell that we actually saw a high put in the market yesterday? The flag is in the top. 10 past 9, Macroscope, Aaron Bright and Martin Harris. Oh, that's clever.
Yeah, surprisingly, actually, well done.
Under the Macroscope. Who came up with that idea?
Good question. Maybe one of the 16 people working on the marketing team got together, brainstormed.
You'd think it was one of the viewers. Well done, that is a great one. Under the Macroscope. And 9:35, Julie Lepselter is back in the building all the way from Chicago. She is in to help Angeline go through Trader Tools.
Is she from Tasty?
Have you not met Julie? She sits about... Honestly, she could hit you with a tennis ball from where she sits.
So it's a massive office, so crowded.
Right. We've got inflation problems. Let's go into overnight action.
Come on, lads.
So we had US CPI yesterday. That wasn't great. Oh, we stuck on that, are we? There we go. Cam and Terence in this morning.
Clearly.
I walked in this morning. I get in about 6:15, and Terence is sitting there with a muffin. How can you be eating a muffin for breakfast?
Kids these days, eh?
Honestly.
Back in our day, 2 hard-boiled eggs and some jelly deal.
It's a jelly deal. Is that what you actually had in Aberdeen?
No, we actually had a full Scottish fry-up. Me and my mates actually had a Scottish fry-up review. So we visited like all the Scottish fry-up places in Aberdeen and ranked them.
That's been quite a lot.
Yeah, we got busy.
That was your university days. That's how you spent them.
That's how I spent the student grants. Thank you, students' government, for that.
Now you know why you're at the gym every morning. Right, so let's take a look at those inflation numbers then. There we go, 0.3% month on month, 2.7%. That was up from 2.4 the month before, 2.3 the month before that. I don't think we're meant to be going higher. That's not the direction of travel we want to take, Ronnie.
You know what? What's really shocking to me and surprising is that if you impose tariffs on other countries and you start making every product more expensive, that the prices are passed on to the consumer and the prices rise. I'm really surprised, actually.
If only there was a way of measuring that month on month.
Imagine. I'm so surprised to see that this is actually going up. Why isn't Jay Powell cutting the rates?
And because it's his fault.
Oh, right.
So, yeah.
Sorry.
It's his fault that prices are going higher and inflation's going higher, and therefore Trump's cost of funding that big, beautiful debt is also going higher as well. Jamie Dimon yesterday saying, Donald, stop messing with the Fed. Just be careful what you're seeing, because the consequences can sometimes be opposite of what you are intending. So why can't we just have more people like Jamie Dimon, Scott Bessent, just in charge.
The problem is that even if they are in charge, will it be implemented? Will we have, a president who actually listens? But yeah, you know what? I think I want to circle back to the conversation we had a few weeks ago about how many rate cuts we're going to have in the US this year. And with this data, it looks like I might turn out correct with 0.
Could well be. Certainly there's a chance that we get 0 more right here in the UK, because let's take a look at how UK CPI has come out this morning. If you're long pounds, as most of us are, then you should be happy with this, because the pound has gone stronger on the fact inflation came 0.2% higher than expected year on year in both the headline and the core. And month on month there, 0.3, 0.4 in the core. This is really not a good 24-hour period for dubs, for people looking for rates coming lower. And if I was a mortgage holder, I would be worried with that path of travel.
Yeah, it's surprising to see that, despite all of this, we're still getting higher inflation. It continues to go upwards. But what is also worrying, if you look at the banks are they're quite mixed results across the banks. The US banks had earnings out yesterday, and they still had mixed results as well. So looking at the data and then looking at where we're heading in the direction of inflation, I'm not really optimistic in anything when it comes to either rate cuts or...
At the same time as slower growth. That's the real problem. That is why I'm so bearish and I am crowing this morning, because
give me your pen.
We are going into a period of higher inflation and slower growth. That is not what markets enjoy. Equity markets hitting 6,300 yesterday. And now we're at 6,227. That is a retracement that you see at the top of markets. Oh, is that what slower? Look at that G. It's gone.
For anyone who can't,
there we go. Put it over your face, and you might actually.
Stagflation.
Higher inflation and slower growth is the what we don't like to see. So what have treasuries done on the back of that, people? Well, you see that not only has the 30-year hit 5%, the 20-year has hit 5 as well.
Oh, sorry. Yeah, I think he was looking at me. Sorry, I was just praising my own handwriting over there. Yeah, I mean, if we look at the sort of the bonds as well and the US treasuries, it's worrying to see that the cost of borrowing is continuously increasing to be high, and this is all trickling down to a lack of, it's leading to reduced US budget spending, higher deficit. Mm-hmm. Each percent that this goes up, it's billions in interest payments. So yeah, this sort of big debt bubble that we have in the US, the more we continue like this, the closer we get to bursting it and finally having a complete meltdown.
So poll of the day was yesterday. The top of the S&P 500 for the year was 6,300. The highest we're going to see it. That is the poll of the day. We're already 1.2% lower. So that is producer Phil just about to put that out. So moving on, we of course had our wonderful Rachel. Only one tube. It's about, well, it's actually we're opposite this coffee shop that Angeline very kindly brought coffees in this morning for both of us.
Yes, for both of us. No, she let me drink the
Kool-Aid,
the burnt office coffee. We don't spend money on good coffee, so we can keep costs low for our clients.
Championing the client.
Exactly. Please do continue, Rich.
Yeah. So Mansion House speech. This is a hangover from 2010. We saw just absolutely incredible regulations build more and more and more. And it's why I eventually left banking in the end, because honestly, the red tape. I had to sit in 2016 and spend 2 hours reviewing emails of my staff members. 2 hours reading their emails. There was some quite good gossip in there, to be honest. But
Seems like you love a bit of bureaucracy, you, Rich.
it was honestly, and that's head of trading, right? For Russia, Turkey, South Africa. Do you not think there's more important things going on in the world than a couple of my staff swearing at each other in South Africa on an email?
For you, definitely.
So yeah,
So, Rich, we put you in
regulations got
charge.
more and more and more.
We put you in charge. What do you change?
No, this is what she started on last night. Is great. Does it go far enough? I don't know, but it's a really good start. So Rachel Reeves also writing in the Financial Times today, but the summary tells the regulators to loosen up and boost share investment. So this is exactly what we are here for, Ronnie, isn't it? We're to help Rachel and help the people out there with their investing mission.
Yeah, absolutely. And I think it's sort of a growing trend to sort of cut the red tape, because people realize we have gone too far. Absolutely. Prior to 2007, 2008, we didn't have enough with the constant deregulation led by Clinton and, not Ben Bernanke, Alan Greenspan's low rates.
Yeah.
But now we've sort of gone too far the other way. And I think people are realizing that we do need to find a middle ground,
Especially in this country.
Yeah.
And America did away with it a long time ago.
Yeah, but
they're
UK
firing
as
on
well.
all cylinders.
The UK as well needs to have that needs to be a bit more sort of free market friendly, in my opinion. I mean, we're looking at Switzerland, and they're now imposing higher reserve capital rates, which are, harming the banks over there as well. Maybe your former Credit Suisse.
I was going to say, yeah.
Your former Credit Suisse pals would disagree, but there needs to be some sort of incentive for the financial sector to be located in London and to have that sort of growth come through, and that's through deregulation. Even though we love the FCA, let the record show.
Absolutely, and we love the path that they're now going on.
Yeah.
Because here is Rachel Reeves' article she has penned herself in the Financial Times today. Her opinion piece is that the pendulum has swung too far on risk. What does she mean by that? Well, we have literally gone too far. Risks, like most things, can be good and they can be bad. It's not good for an economy to bear too much risk, because we've seen it in the financial crisis. Assets collapsed, working families paid the price, bail out the banks. The protections that were put in place in the years that followed were the right thing to do, right? Nobody's arguing that. 2010 to 14, they really needed to put these stringent regulations around banks in particular. And the better protections for consumers as well. More accountability, such as my boss's boss would have gone to jail if I had done something wrong. To jail.
Your boss's boss.
My boss's boss.
You know what? If more people went to jail, maybe we wouldn't have the 2008 crisis. How many people?
Well, no, they should have gone to jail in 2009,
Yeah, exactly.
10. But more than a decade on, 15 years in fact, she's been a little bit low on that number. The pendulum has swung too far in the opposite direction. Excessive focus across our economy on stamping out risk entirely. And that is a UK problem. We are the absolute worst at it. Excessive focus on stamping out risk entirely. The same flawed judgment that has seen newts and bats block major infrastructure projects is the one that requires almost 140,000 finance professionals to certify they're fit for their roles on an annual basis. It's short-term thinking, it slows authorizations for innovative tech companies, and it delays their journey to growth and the access to capital. More growth, more profits, and more tax revenues for the government.
Absolutely.
So I think she's definitely made a step in the right direction there. But we'll see. No change to cash ISAs, but she is going on a education rampage. I'm sure she will probably want to sponsor this show.
Yeah, I'm sure. I think she even reached out to someone about coming on the show because she knows the influence that this show carries.
Yeah.
But yeah, I think there's a lot of sort of we need to sort of just rip the carpet out and just start over fresh in order to fuel the economy. And it starts from the bottom up, right? It starts with the grassroots, the investors, the everyday investors. I mean, if I can, give a shout out to my home nation, Sweden. We have sort of uncapped investment savings accounts, and we have the world's highest highest percentage of the population that's invested in the local stock market.
Sweden does.
Yeah.
Well done.
And there needs to be a similar implementation here in the UK as well. 20k ISA allowance, great, but increase it to 30 if you put the extra 10 in UK stocks. There's trillions of
People got
pounds.
angry with that though. They actually got angry. You're giving them the choice.
They don't know what they want.
You're giving them something more. You're saying 20,000, go and invest in wherever, India, United States, Azerbaijan, who cares? That's 20,000 your ISA. We'll give you another 5, and if you choose to use it and invest in the UK, then you'll get it. And people argued that that was wrong. It's like, well, don't use it then.
Yeah, don't take the free money.
Yeah. And what's happened since? Oh, well, the FTSE's gone to new highs.
Who would have thought?
And that's what happens. Little bit of momentum behind this. In pound GBP terms, then the FTSE's up more than the S&P 500 is this year.
Yes, Matern is right. Norway also has the largest pension fund in the world. If I was in charge,
I'll tell you what, they are hard to trade with. Oh, they run us over. I remember they sold me 50 million euros of Volkswagen once, right? And I had about 3 hours to get out my risk before they came on and went, right, we want to sell another 50. I'm like, I've still got 40 left. You're going to shit all over my market. And literally, we held them off to the next day, but we must have taken about a 200,000 euro loss on that, I reckon.
And this was when you were at Credit Suisse?
No, this was at Macquarie.
And they were just like,
oh, they're animals.
Pumping out on you.
Yeah, they're really.
With the size they deal with, they're the world's largest shareholder. I think they own 1.5% of the global stock market or something like that.
Wow.
It's insane figures.
And I tell you what, they did a massive rotation in 2018, just when everybody was going green. So remember, like, oh, if you hold BP, that's you're causing global warming and tobaccos, everything like that. So of course the whole ESG movement,
they've been at the
they were very good at that.
Yeah, let's see we all saw how that turned out.
Yeah. Anyway, we sidestep.
Yes. Apologies.
Let's take a look at the futures this morning. So as we said, S&P 500, 6227, NASDAQ coming back down as well. It hit to 23,000. FTSE taking a lurch lower there. That's on the back of the pound going higher on those inflation numbers. And Bitcoin took a bit of a bath yesterday, down 3%. That's regaining some of it, up 1.5.
I mean, what's quite interesting to me, what's just pops out to me is that we see sort of oil stabilizing at around the 65 level. Mm-hmm. That's been sort of all over the shop, but I feel like now with sort of the sort of blunt instrument of Middle Eastern uncertainty, as people have sort of we've gotten used to that level of uncertainty and headline risk, so it's sort of like it just blunts off. So oil keeping steady at 65, I think that's where we see it going forward. And then what else is popping out to me?
Let's take a quick look at iron ore because we have.
You'll have to educate me on this market, Rich. I'm not.
Oh, it's a tricky one. It is a tricky one. But everybody's looking at copper at the moment. But look at that iron ore. So you put iron ore and coal together, and you blast it at a massive heat, and you get steel.
Oh, interesting.
Right. So huge component. This, this is Australia's economy.
Iron ore.
Yeah.
Well, Australia, they are. Did you? Isn't Australia's? I forgot his name. Mr. Australia, I'll call him, as Trump called Japan's partner, Mr. Japan. So Mr. Australia, he was meeting with the Chinese leadership now. So it's interesting to see how they're going to come out from this meeting, because it's their biggest trade partner, but it's also their biggest national security threat.
Yeah, and they've, in the end game, they've got to decide who to go with.
Yeah.
However, look at Rio Tinto. So that was my point there. Rio Tinto has most definitely recently underperformed iron ore. You've seen a nice tick up, remembering that 70% of Rio's revenues are from ore, dropping down from £45 yesterday, £43.46. That's important because we had a mining theme this week. John Mayer, really good interview the other day. And he believes that copper assets are the most desired. Now, Rio's has got a bit of copper. That's, I guess, 10 to 15% of its revenues on top of the 72% of iron ore.
Why is copper the most desirable one?
This continued idea that you need so much of it to go into data centers, to go into EV, and there is or has been a continual lack of investment into new mines and new future production. So you've got demand going higher, and you've got the future supply. Not at the moment. At the moment, it's still balanced, but you're going to have a deficit in the future. And a small deficit, this thing moves. So that's the iron ore price, that's the copper price, and the mining sector is starting to look interesting because it has been left behind, really, with the FTSE. It's been left behind with the tech sector, for example. But why am I talking about this? Well, because if we're going back into an inflation trade, then the materials are somewhere that you definitely want to be looking to have exposure.
Now, should one buy, in your many years of experience?
Too many to mention.
About 40 years you've been working? Is it 50 years you've been working?
I got my first stock 29 years ago.
Bloody hell, mate. Yeah, wisdom right here. So in those 30 odd years of wisdom, would you say that as a trader who's looking to sort of inflation hedge now, is it better to buy a Glencore, a Rio Tinto, Antofagasta, or should I just buy directly the underlying future of the commodity?
It's tricky. It depends on the supply setup, right? Because the trade back in 2006 was you buy anything the Chinese don't have, right? Because they were obviously the big consumers.
Yeah.
But stuff like aluminium, they already had bundles of it, so there was no demand, and aluminium just was useless. So if it's a stock that has exposure to something that is in short supply, that's what you want to go for, because the stock gives you the extra leverage. But if it's a crap company,
yeah,
then you don't want to touch it. And that was the South African gold miners, in fact, most companies in South Africa, because of the cost overruns.
Let the record show.
Most companies in South Africa,
let the record show,
are terribly run, and they don't have.
Is this what it usually
energy.
feels like for you when I sit here and say crazy stuff?
I don't think there's anything crazy about South African stocks have been a massive underperformer in the mining sector because of their operational problems.
Rich's questionable comments aside, which mining companies has the most exposure to sort of copper or any other commodity that is undersupplied?
What are you looking for? So this was the play of the week, that Anglo-American has the problems in South Africa, therefore is trying to sell its South African operations and de-merge from them because it's holding them back.
Yeah.
Right? So Anglos wants to become a cleaner copper play and therefore will go back into the shop window because it has some really top quality copper assets.
So Anglo is the one I should be looking at.
Well, Anglos is the one that our expert said on Monday that could be a bid target in the future once they do the cleanup. So it's a kind of longer term thing. But yes, I bought some straight away.
Thank you, Rich. I'll now conduct my own research, which I can do on the IG platform.
But the sector in whole is interesting. You know, Rios has been a big underperformer, but that's because the CEO departed in very strange ways. Right, it is now 7:56 a.m. We're going to take a 1 minute interlude for you to guess the chart. Now, I got it yesterday, so are you going to beat me? That's an incentive just to shut me up. Get in there and get your answer up. It is a UK stock. Who is going to be fastest finger first on the comments? Are you ready? Albanese.
Yeah, thanks for that, Fire Truck.
3, 2. You beat me. Well done, Gavin Ackers. Well done, Julian. But yeah, Gavin was first with Kingies. Boise, that's funny. I said, is it Legals as well? But it's a bit too high for Legals. And Legals didn't have that big run up last year. Kingfisher, B&Q. It's also got a French business as well. I don't imagine you've ever done DIY in your life, have you?
That's not for me. None of that nonsense. None of that woke stuff.
IKEA.
I build IKEA furniture. That's about it.
Okay.
Yeah. I'm a handyman when it comes to IKEA. We have, like, in school, we learn how to build IKEA furniture.
Right. Today, we've actually had news from Antofagasta. They have maintained their full-year copper production forecast. They see a positive outlook over the medium term. They are looking up 1% in your fags. AstraZeneca, unchanged. They've had an update on some drugs. Bloomsbury up 2%, Workspace down 2%, and ASML. We had ASML numbers. Just a really quick. Do you want to cover those?
Yes, they did beat expectations with Q2 bookings at 5.54 billion euros against expected 4.8 billion. However, the concern comes from not. The concern comes from the lack of guidance coming forward. In my opinion, I think ASML is I was speaking to my friend who works at BlackRock as a tech equity researcher, and says, if you love your grandparents, sorry, not grandparents, grandkids, buy ASML.
Right, Marks and Spencer's down 60 basis points from the off. That's as low as I remember seeing Marky's for a while. So that's interesting. It's definitely been an underperformer since the cyber attack.
If you like them up there, you love them down there.
Not so sure. What else do you see there, Ronnie?
There's nothing that's really sort of popping up. So
On the downside?
yeah, nothing crazy interesting.
Let's go upside then. Where is it? It's Emerson recovering from bit of weakness yesterday. HSBC up 1. And
That is up slightly, 0.5%. HSBC.
BAT's up again. My goodness, that thing is strong every day.
And that's a good dividend stock as well. Are they dividend aristocrats? Or dividend
yeah,
king?
I cannot remember them ever cutting a dividend. So yeah. Oh, right. Let's go across to Europe because producer Phil is telling us ASML is down 5.5%. Luke Moore trying to buy it yesterday just because Nvidia was up. Well, you've got some problems this morning if you've done that because you are 5.8% worse off. Luke Moore buying it at 700 euros yesterday. Tricky because Nvidia had some positive news.
The thing is, with ASML, I don't think you buy ASML for the sort of short term. I think ASML is an interesting company because one thing that we have to remember is that ASML is the sort of, they produce the machinery that these ultra laser scanners that create the chips. Yeah, I did science in school. And
Did you? School, not university.
no, definitely not. But we have, with the competitors of Nvidia entering the chip manufacturing or designing market, so Amazon are designing their own, Meta, Apple, and Alphabet as well. There's gonna be a larger group of companies who are buying these machines and the need of them.
But it's a continual underperformer. So there's clearly a problem. I think we have to ask Piers. Piers is on tomorrow. We'll ask him about ASML because this thing is just an absolute dog in a sector that's at all-time highs. Another dog, a French one, Renault, having a profit warning this morning that read
the CEO as well.
About blooming time. Because, I mean, the problem is, right, they've got China, they've said the increased, do we not have a soundbite for that? Go on then. Can't find it.
They have one job.
Can't find his China.
They've got one job.
China.
There we
Yes. Wow. He's a hot on the buttons this morning, isn't he?
go. Yeah.
Thanks, Cam. Yes. So you've got increased competition from China, and you've got a terrible car.
Yeah.
So you've got no hope because you can't even compete with Ford. You can't compete with Fiat. So how are you going to compete with some great Chinese car that comes in?
If you can't compete on, and like the Nissan Leaf is expensive, like you can't compete on price, you can't compete on quality. What do you have in beyond legacy? Oh, it's suspended. Blimey, this is not going to be nice.
That's not going to be a nice open, is it?
That's not going to be a nice opening. It's time to bring Carlos Ghosn back.
What's your best guess? Because, you know, we haven't got any indication. We haven't seen anything. I'm going to guess down 12.
Yeah, more than
guess.
minus 10. More than minus 10 for sure.
There was support at 38.
I think we're blowing past that, mate.
Yeah.
Yeah.
All right. So if it opens at 38.80, are we shorting it?
Yes. Just jump on the trend, mate. Just jump on. Trend is your friend.
Yesterday we had a great chance. Yesterday was buying BME, as Andrew McKelvey said in the chat. Oh, he benefited from that because BME rallied throughout the day. Let's take a quick look at what it did. That's B&M I'm talking about. Sorry, of course. We had. Where's the minute chart?
Oh, that's.
No, it's back down this morning. Though. Look at that. It got as high as 241. Remember, we were talking about it 223 on the open yesterday, now trading 230, but you could have got out at 240 yesterday. Andrew McKelvey, did you sell some of the extra stock you bought yesterday?
Or did you get greedy?
The other one we saw was Bharat. That wasn't so good. That also had a proper rally during the day up to 390, but FTSE's been really ugly since it hit 9,000 actually.
Yeah, the home builders in particular had a really rough day yesterday.
Shut off.
DR Horton as well, Pulte Group. But yeah, I'm wondering if it's more than just a take profit that's coming to play here. Okay, what do we have?
Right, down through 660 euros ASML now. We saw it throughout the tech sector yesterday. Nvidia opened at 172.5 US dollars, but it couldn't hold it. The whole market could not hold it yesterday. You had Marvel, the technologies, that is a play that we're watching here. That was up 2.5% pre-market, got down to only up 60 basis points. They did not like seeing the 23,000 NASDAQ and the 6,300 on the S&P. Europe continuing to get hit this morning. We're seeing a lot of retracement, even through new lows for stocks like Porsche.
I'm genuinely concerned with the European automakers. I mean, because they can't compete with quality anymore. That used to be the thing, right? They used to be, yeah, you can buy a cheap Chinese car, but you'll get a much better quality from us. Pay for the premium.
Sorry, who's us?
European car makers.
Us and them. Apparently BYDs are real top quality.
No, what I'm saying was this was before.
Ah, got you, right.
Yeah, if you paid attention, you'd understand.
Back in the good old days.
The European car makers would always be superior in quality.
The French? What are you talking about? The German ones?
The Germans.
Well, don't talk about Europe.
Okay, the German.
Sweden and Germany.
Sweden and Germany. We don't have any cars anymore. It's owned by the Chinese now.
Oh, really?
Yeah, Geely owned Volvo.
Oh no!
Yeah,
and sold out your prize asset.
Yeah, that was ages ago. Anyhow, back in the day, the Germans could compete with quality. Now, as we've done the shift towards EVs, they can't compete on quality, nor can they compete on price.
And they can't spend the amount needed to keep up.
No, exactly. And they have bloated corporate structures that have built up through legacies. They don't have lean organizations like the Chinese do, and they don't have the state backing as the Chinese companies do.
What I'm hearing from you is, let's see a merger of Mercedes-Benz and Porsche, or BMW and Porsche. Mercedes-Benz and BMW would never. They would rather, or Volkswagen and BMW, or Volkswagen and Mercedes-Benz.
BMW merging with Volkswagen, isn't Volkswagen like 50 times bigger than BMW?
No, not anymore, because it siphoned off Porsche, remember?
Right. I would rather see Volkswagen and Mercedes coming together and creating like a powerhouse of the ultimate German engineering car.
That would be incredible, wouldn't it?
Yeah.
Absolutely incredible. And it needs something like that, because these European manufacturers, they've been terrible for years.
Yeah.
And the margins are not great.
No, because they continue to. I mean, they have strong. So especially Volkswagen. If you look at Volkswagen, they got the Lower Saxony, who's owning 20% of the company, basically ruling it. Companies ran by the labor union. You can't run a business in that sense, and you have the Chinese who are coming in. Extremely sufficient, extremely quick. I mean, yeah, get used to this. It's just going to be a continuous cutting of outlook because it's not looking good.
Look at that operating margin. How embarrassing is a 6.5% operating margin? Your leverage on revenues is just, you see slowing revenues and you are toast.
Yeah, I mean, this is horrendous return on capital.
So aiming to achieve full year free cash flow of 1 to 1.5 billion versus 2 billion euros previously announced. They're cutting their free cash flow target by as much as 50%. Whoa, this stock is toast.
You know what? I want to give out a special thought and prayer to our old friend, producer Fred.
Yes.
But producer Fred was smart enough to buy Swedish. He owned a Volvo back when it was Swedish.
Is it really? So what does this mean then? This mean it's the stock suspended?
Well, is on the exchange, if it more than -5%, they're gonna halt it. So it's probably halted by.
Past 8 though.
Yeah, but this is probably dropping. I think we're going past 35.
So can you message the desk and see if there's any indication, please? Right, let's keep an eye on Renault. Producer Phil's going to have it up on his screen as well. But what are the others? Well, Stellantis is seeing through some of that read-through. Stellantis, of course, has the old Peugeot involved in that. That's down 4.3. And Volkswagen down 1.8. Far superior cars. Where's Volkswagen now on the chart? Because, as you say, such a better company. But if you've had money in these automate, I mean, look at that.
Hey,
that's value destruction.
And that's, keep in mind, when's that peak? 2021?
I tell you where this is lower. Oh. This is now lower than where they got caught for the emissions.
Ladies and gentlemen, we just got in from our colleague Neil Ray on the institutional desk. Renault indicating down 16.5%, 34.5.
That's a great shout by you. That's very impressive, Ronnie. For somebody that's only been doing this job for about 4 months, that is.
That's not true.
Right. Yeah, between 16 and 19%. But people, honestly, Volkswagen, when the day that it was announced that Volkswagen had been in Dieselgate for years and they had been falsifying their emissions.
Sorry, yeah, I interrupted you. Was that the peak? Was that was that post the Jetta Volkswagen emission, the peak up there?
No, that was 2015.
Yeah, so it's way earlier, right? So this was even before the peak of the emissions.
But what I'm saying now is that it was at trading at 125 euros that day, and we smashed it down to 105, and I was still shorting it at 105, thinking this thing's going through 100, and I think it touched 100 and went back up. So where are we? Yeah, there it is. 2015 bottomed at 87. Sorry, on that day. And
so that was a good shot from you then, saying that it's going to go past.
I think it was there for about 10 minutes though, because I remember not doing particularly well from that trade. But it is now down at the same level as it was. Yeah, there we go. Oh, it was even higher than I thought it was. It was 145. And it was a couple of weeks later, it dropped to 100. But yeah, it wasn't there for long and straight back up. We all got caught on that short.
Yeah, I'm not very positive on Volkswagen. I don't see any sort of turnaround plan. Their car is more expensive.
But there has to be something to do. Got to be. Right, Renault's open.
Renault's open. Cam's fucking. Oh. Sorry, go on. Sorry.
I think maybe drop a little apology in there.
Sorry, guys. Sorry, it's going mental in my ears. Sorry.
Too much excitement.
Too much excitement here.
This is why we don't give Ronnie coffee in the morning.
I had a Red Bull as well.
It's that early morning gym session, isn't it? So, yes. Ronnie clearly long this in the demo account. He's getting all emotional about it. But 35 euros. What do you do? What do you do? We said it's broken that 38. Obviously, clearly, a lot of people short this and they buy back straight away, right? So all the smart people, I know my good friend Nihao that has been doing this for 15 years. He's the kind of guy that's going to know that this was coming because he works so hard on it. I'm sure he's in there, right, buy me $5 million on my short. Thank you very much. I've made 600,000, 700,000 today. I'm done. Done for the day.
That is going,
But once those people have closed, then you get long funds coming in to sell it all over the day, don't you?
Yeah.
Potentially. In some situations, it may not be this one.
Oh, look at the gap on that, mate.
So, oh dear. Where does that settle? This is when valuation comes into it. Forget your technical analysis. This is when you need to know how much of the stock was dependent on that free cash flow that they have now cut. We take midpoint, 33%. This stock could be down 30% today. Like there's real concerns. There has to be concerns about the longevity without some serious changing of the business model there. If the Chinese are coming in with serious competition, then how does something like a Renault keep up?
The thing is, we obviously talked about merging some of these companies, right, to become a bit more competitive, merging what a Renault and a Stellantis, but I'm not sure that will actually be positive for them because these companies already have bloated structures, they have bloated human capital, and I think merging them together will just make it even more of that. There just needs to be significant cuts in terms of spending and significant improvements in terms of research and development, and it's sort of like you need to spend way less on your operations, but you also need to spend way more on your research and development to actually be close to competitive, because the Chinese are leading the EV race.
And they don't have the cash generation to do it.
That's the thing.
Yeah.
That's the thing. They're stuck. Just close down shop, guys. Just close down shop. There's no coming back from this one.
Give the money back to shareholders.
Give the money back to the shareholders. Seriously, strip off the assets.
See, if the long funds come in to sell this today, and I do not know. I haven't looked at Renault for months, right? But all I'm talking about is experience in the autos on a profit warning. If a serious seller of this, and I'm talking about somebody who owns 1% of the company, wants out and they make the decision in the morning meeting, I don't know how, as I say, it could be down 30%.
Easily. And it's, this might not even be the worst of the news. They have a new CEO coming in. He's going to have to reassess the situation. Mm-hmm. I mean, he's I think he was I'm not sure if he was in the company before, but yeah, I don't think I can't see any sort of positive catalyst in the company.
Yeah.
They're not even best in Europe. They're not even best in France.
Right, so we've got that was a nice little story this morning. But let's not forget ASML now down 7% in ASML. Stellantis down 3.8, and our UK friends not having the best of mornings either. AstraZeneca. There was talk overnight of more more tariffs for pharmaceuticals because.
Yeah, Trump has announced that he gave, what did he say? Here we go. We got Trump's comment up here.
And just before we move away from France, do you know what the Prime Minister suggested yesterday to help the French economy? Huge cuts in public spending.
Yeah.
But they're going to cancel 2 of their public holidays. That is what the Prime Minister is suggesting.
Oh, what? I just know. Yeah, they're gonna cancel the public holidays. How much you want to bet the yellow vests are coming out? The Peugeots are being burned. The offices of LVMH is getting smashed.
You can't cancel public holidays. Come on.
In France as well. There's nothing the French love like their time off.
Allegedly. Do we have anybody French in this company? Or?
Yeah, we got Maxime at the We got Maxim in the on the desk. I texted him as soon as I saw the news. I texted him, and he told me, "Yeah, already arranging the riot." Just kidding. He's not gonna riot.
Do you have Bastille Day and things like that against? Right, number of public holidays in France is 11. Oh, there's minimum and maximum though. Minimum, maximum. In Germany, it's 10. So Germans only have one less than France. I'm surprised by that. So you don't want to cancel 2 of them. And the United Kingdom has 8.
Maybe we need to cut a couple of them to get our growth going.
And maybe we increase by 1. Give everybody... well, no, I'm not going to go there. God bless the Queen. We had an extra one then, didn't we? Right. On that, we'll go to break.
Okay, guys, before I teach you how to use this, I have to teach you how to use this. The mind. The cash return wasn't all about speed, it wasn't always about power, it was about the mind. Become the bull. Visualize greatness. Okay, minds are ready. Time to go. Hey, come on, Pat. Come on. Cash returns, come on. Oi! Oh, you're not going to get better than cash returns.
Today we're here because we've recently launched our Save Our Stock Market campaign. We just want to raise awareness for terrible cash returns that everyone is getting with their money just sat in cash ISAs. What we want to do is raise awareness for the great returns that you can get on UK stocks and help revive the UK stock market and get people investing.
There's a lot of bad feeling about the UK stock market, and it's really negating people's view on the UK market as a whole. There's some great companies. If we just start the ball rolling on people getting behind the UK stock market, then we can start to get the interest. And it's days like this, we get awareness of all the crowds talking about stocks. It's really that awareness, and ideally we'd like to take it to the government. We would like cash ISAs to be reduced, not because we don't believe in the chance of people saving, but more that you get higher returns, as much as 7 times historically, in investing that you can from cash. And that's not saying people go out and take a load of risk. It's about education, and it's about helping people to understand the benefits of investing and the limitations of holding their money in cash.
Hey, trader friends! Welcome back to the show with Ronnie Eggnog here this morning, talking all about Renault and loads of other things that will not be. Lots of you on the chat here loving this morning. Nothing like a profit warning to stir things up. We've got the poll results out as well. Take us through them, Ronnie.
I don't even remember what the poll was for,
Have we just seen the yearly top for the S&P 500?
45% says, no, we are going higher still. I hope so, because my pension is very heavily invested in that. Yes, I believe so, says 33%. And only time will tell, which is 10% and the most boring answer. And then we will stay around this level, says 9%.
Wow.
What do you think, Ange?
I did vote because, as you know, I'm out there giving all our trader friends, you know, the sort of filtration of the Ange AI that I'm building at the moment to try and give them the upgrades and downgrades ahead of the game. Also the biggest movers of the morning. So I hope you guys appreciate that. I think it will continue to move higher. And on the premise that, you know, we don't have a huge number of shocks from Trump, but markets don't seem to care anymore. You know, they don't seem to. We've been in this place so often with the taco that they don't seem to care, and the melt up seems to be grinding higher. Taking a look at the indices here, trader friends. I'm just giving you a quick check in. And currently, as we count down to the all sessions, it looks like a pretty flat to slightly lower day as well. Going through some of the movers, let's just quickly, you were looking at Renault earlier on, let's just quickly see how far it is. Now starting to head deeper into the red. It's now almost 17%. So earlier, remember I was saying ahead of before it uncrossed, I said early indications suggesting 16% down. It is now almost 17% down as we speak. I hope someone's told Fred about this, because he drives a Renault, doesn't he? A Volvo.
Oh no, Fred, he's a Volvo. He's a Volvo. That's how me and him became friends. We bonded over a love for Volvo.
Do you remember the ad? I think it was a parody. Don't go sexy, go boxy.
I don't remember that.
Buy a Volvo. Let's have a look elsewhere. If you take a look at ASML, going to bring that up for you as well. ASML, one of the biggest losers in Europe. Look at that gap down there. This is the hourly chart for you trader friends. What is it you always say on the show? Something about if you care about your, is it grandkids? Is it ASML?
Yeah. If you love your grandchildren, buy ASML. It looks like now you hate your grandkids if you buy ASML. I'm not quite sure I can hold on to that, but I'm still a firm believer in the company. I think they're part of the sticks and shovels of the AI race and development. I think if they can just get their darn guidance in order, I feel like they can never get their guidance right. They always like. Who's in that financial planning and analysis department? Because they need to switch that out, because the guidance is always wrong.
It is always wrong, isn't it? So in this particular case here, with the reason for that big gap down is that ASML said that they would not or may not achieve growth in 2026. Yeah, who's dealing with the projections there?
Yeah, but they did achieve growth in 2025.
Yes, and this is even after, that's correct, after second quarter bookings beat the street.
Yeah.
So there's a bit of a disconnect over there. This is, of course, the gear maker, the world's biggest supplier of the stuff that makes the chips, that makes things work for us. This move also coming after Trump's most recent tariff statements, which is creating a huge amount of uncertainty. The EU also looking to potentially hit back. So all this not great for that industry. Let's take a look elsewhere. Some of the other movers today that I highlighted earlier as well. So bring up my filter there. We are seeing pretty much a down day for some other names there. Bring up Hayes. Hayes, yeah, down 2.7% there. This is the hourly chart there, trader friends, but showing you the 1 minute rather. There you go. That's better. Here is Hayes.
That's the recruitment firm.
Yes, and things are very, very difficult for this market. As was it Monkey Man or was it Gavin Ackers that said this morning something about loads of people out there who don't know their jobs, don't want to hire people who actually know what they're doing because it makes them look bad. But also this move is because of a broker rating cut. Morgan Stanley slashing Hayes from equal weight to underweight, and also the target price that they're looking at now, 55 pence. It's currently at that 65 handle as we speak, 65 and a half there.
Ange, what's your view on the pharma stocks with Trump coming out saying that pharma tariffs are expected probably at month's end? Because they haven't moved much today. We saw AstraZeneca down about 1%, but nothing that sort of screams scared or anything like that.
Yeah, so AstraZeneca is indeed lower, 1.3% there. But I think it's going to be trade the fact, right?
Yeah.
So a lot of this has been baked in since October, trader friends. So those of you that have been watching since then will remember me saying that even since last autumn, Trump had already been saying that the crosshairs will be on pharma. He's already made no secret he wants drug prices to be cheaper for all those voluptuous people over there.
Yes, and in putting tariffs on will definitely decrease the price.
Well, it's not gonna. It's gonna increase the price, but also he's gonna do that thing, the art of the deal, and he'll say, "Well, if you want me to take these tariffs off, then you're going to have to lower your prices, and allow us to bring on cheaper versions of whatever you're selling are not very well Americans." Yes.
Well, yeah, and also it'll be a bit of a fierce competition with India, who's investing heavily in becoming the sort of pharmacy of the world, with sort of acquiring a lot of pharma production capacity. So I'll be watching the pharma stocks quite closely to see what the development is.
I think, trader friends, if you're trading in space, be very careful, because we could see, a huge move if we suddenly see tariffs come through on that. However, until it's almost like trade the fact. Incidentally, India is the biggest producer of paracetamol. Yeah, and it has, I would also hasten to add, solidified its position as the world's biggest maker of generic drugs as well. But AstraZeneca, that moved lower today, also to do with the fact that its amyloidosis treatment managed to fail the main goal in a late study. So that is one of the reasons for this big move lower. Right, I hear lots of people asking for NVIDIA. Rich McDonald coming in on the chat as well. Chinese production lines versus French. I wonder which I back, considering a woman in China has been arrested for trying to hold the train door open for a friend over there. Interesting, I did not hear about this.
Rich is getting arrested by the CCP as soon as he lands.
Okay, we only have 2 minutes to go. So, trader friends, any questions for Ronnie and myself? We will look it up for you and video very quickly, because, of course, this quietly rose to a 4 trillion stock. Is that right? 4 trillion, I hear?
First ever company to reach $4 trillion valuation.
Yeah, come on. We are going to be looking at this ahead of the oil sessions here. This is the daily chart. Very strong uptrend still in play there. NVIDIA coming out with lots and lots of comments already, saying that Jensen Huang saying US will be vibrant, China will be dynamic and continue to grow. There is always room in any house for two people, which is what I'm expecting him to say a lot later, as well as he makes his tour around Beijing, because he's talking in Beijing.
He's meeting the Chinese premier, right?
Yes, I believe so. He is also expected to outline the software and capabilities of China a bit later on. Because obviously the thing with NVIDIA that everyone needs to remember is it is in their best interests. Trader friends, you're listening here, this is very important. It is in their best interest, NVIDIA's best interest, to continue supplying chips at a competitive price to China, so that China doesn't develop their own competing chips. Yes, and the other thing about NVIDIA as well is, you like all your tech. Ronnie, how much tech have you got at home?
Quite a bit.
Are you one of those that talks to all your tech in every room?
No. I try to.
And you have a Roomba going around the house.
I try to keep it analog, but I am. One thing about NVIDIA is that they've now sort of come up with tariff safe or sanction safe chip that they can sell to China, which is important for them because that is roughly 17% of their revenue. So being able to continue selling to China is vital for the development of the company.
Okay, great. Well, we have not much time left, so we have to leave it there. Pelican, good morning to you, and Rafi as well. We have Axel waiting the wings, so we are going to have to love you and leave you, but don't go, because Axel is going to be charting crypto up next.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns, that's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
Bring me the next shiny new thing. Bring me the next shiny new thing.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees, with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
Hello and welcome to Charting Crypto. Let's start off with Bitcoin. And if you remember last week, we talked about breakouts to the upside happening in a lot of cryptocurrencies, and Bitcoin hit a new all-time high. And more importantly, it hit my 161.8 Fibonacci extension target that we discussed as well. So let's go back to that and see how we can use Fibonacci extensions in order to do our analysis and see where markets, when they're making all-time highs, can get to from a technical perspective. So to do that, I'll go back onto my monthly chart. And you may remember from last week, I went through how to do a Fibonacci extension. Let me just make this RSI here at the bottom smaller. But basically what we did, can you see this line here, the horizontal line? Basically what we did is we took the distance from this low here, from the February 2019 low, all the way up to the highest point of that uptrend, which took us to the high seen in October of 2021. And then we projected that distance from down there to up there. We multiplied that by 161.8, 1.618, and then we projected that multiplication number from the low of that correction of that previous uptrend. So basically you have an uptrend, you take the corrective low, you multiply the distance of that uptrend by 1, 1.618, 2.618 and so forth, and you get these Fibonacci extension targets in the future at some stage. And basically when we projected this from down there, we ended up with this target up here. Now, on TradingView, can't exactly put it on there. So I actually worked it out mathematically, and I ended up with, I think it was 122,023 or something like that. And this is exactly where Bitcoin went to this week. Now, it's not an exact number. I mean, it's never going to be to the point, but it is close enough. And quite often, when these Fibonacci extension targets get hit, the market then also corrects short term at least. And this is what we've seen so far. So can you see here on the monthly chart, we went all the way up to our target. Let's now zoom in onto our daily chart and see what happens since. And you can see that horizontal line is the 161.8 Fibonacci extension target that I just showed you. And we hit that on Monday, the 14th of July. We actually went above there. We went to $123,811. If I remember correctly, that's right. That was the all-time high in Bitcoin. And then, lo and behold, as I just said, quite often around the Fibonacci extension target, you get a short-term retracement. This is what happened yesterday. And we've now fallen through this accelerated uptrend line, this dotted line here. And we went back down again to around 115,739. Now, the question is, since we've hit this upside target, is that the end of the current uptrend in Bitcoin? Well, not necessarily. It could go higher still. And technically speaking, since we've broken above these previous highs, one going back to May and the other ones going back to January and December, we are still in an uptrend. We have what I showed you last week, had this A, B, C, LUF correction, this zigzag correction, which I like to look at as well. And we basically then followed that with a breakout above these highs. And that was bullish, taking us to that upside target, which is why last week I said to you, we could head to that target perhaps if we continue with this upside momentum. Now, we've come off this all-time record high. That in itself doesn't mean anything. I mean, look, here we've come off that all-time record high, and then we tried to retest it, and then the retest failed, and then we came down again. So if we see something similar happening here, so a move up today, maybe the day after tomorrow, and so forth, and then we have another leg where we do turn down, then short term, in that case, we may have a minor top. But it might just be a minor chop in a long-term uptrend. And you can see the same here. Can you see we went up, came down, then had a retest, failed below that low, and then came down here. So at this stage, you knew that likelihood was that we would actually retest that low, which is what we did here. But we haven't seen that yet here. So basically what I'm saying is, as long as we stay above yesterday's low, which was at 15,739, you're still bullish. We could still make a new all-time record high. If we were to have a retest of that high and fail, either just slightly above it or slightly below it, and then reverse like we had on these candles here or there, then perhaps, or here, we could see a correction, but only then. So don't anticipate anything happening. Just wait for the market to tell you what is actually going on. Now, from a medium-term perspective, if you look at the trend of Bitcoin, it's clearly bullish. As you can see, a series of higher highs, higher lows. We had this corrective phase here between May and June, and that was the last reaction low of this ABC correction. So if we were to fall through that low on a medium-term perspective, then perhaps we have a top in place with regards to Bitcoin and could see more consolidation. And that low was made at $98,330. So basically, as long as we stay above there, everything's still bullish with regards to the medium-term uptrend with regards to Bitcoin. So if you have any other questions on Bitcoin, let me know. I've got a question from someone about XRP. Let's look at that. And let's see whether we see something similar. Now, we may remember last week, we talked about, when was last week? Monday, the 7th of July. And basically, you can see here, we talked about this resistance area, didn't we? So let's imagine we didn't know what was going on, but so that we were here. We were just testing this area, if you remember. And I put on here resistance, support. I said we were trading sideways. And if we were to break out above that resistance area, now why is that a resistance area? Again, let's look at our basic technical analysis, but it can be so powerful. What you do, you take a series of previous highs, even if data has gone through there, and previous lows. And you can see these highs here on the daily chart. We had several highs here, and these highs, and these highs, and these highs. In this case, we didn't really have any lows except this one here on the 11th of May. But that whole cluster of data was our resistance area. And you can see it held its resistance again here on the 30th of June. And then we tested it on that Monday when we discussed XRP last week. And that was also where the red line was, the 200-day simply moving average. So we had a lot of resistance coming in there, and that was capping the upside. But what we also saw is that the corrective move to the downside might have ended on the 22nd of June, and that since then we've had a series of higher highs and higher lows. And then lo and behold, on the next day we came off that resistance area, but on the following day, on Wednesday, we broke through that resistance area above the 200-day simple moving average and closed above that resistance area. And that was bullish. So basically, that bullish move then told us, okay, what's the next likely scenario? Well, since we've broken out through that resistance, the upside targets we had before to the left of your chart are the next target. So the 23rd of May high, that's for XRP was at $2.48. And then the next higher one was the May high here at $2.65. And what happened? Within a very short space of time, we went up here and through these levels to the upside. Now, what's the next target? How do we know? Well, basically what we do, we go and zoom out. You can see we had this high here and that high here. Can you see how we got close to that high which we made in March of this year, here on the 11th of July, then failed, came down again, and then retested that high. So what are we seeing now? We are seeing a slightly higher high. So we've traded at levels last seen in February with regards to XRP. And the question from the viewer was, oh, that's actually on Bitcoin. So I'll cover that in a minute. Sorry about that. But on XRP, what can we see now? So we're trading at levels last seen, as I said, in February. What's our next technical upside target? So you go further to the left and you go, okay, it might be this high here from the 30th of January and then these highs here. Right, so that is the scenario at the moment. What would change our scenario? Well, basically, we can see we have a series of higher highs and higher lows. And basically, we are still heading higher despite that drop we saw yesterday. So as long as we stay above there, the trend is very healthy and we're still going up. Now, if we were to fall through yesterday's low, what might happen on a short-term basis is that we could retrace slightly lower. But are we seeing any negative divergence on our oscillator? Can you see down here the relative strength index? No, because we are seeing a higher high. This high was accompanying this high, and this high here was accompanying this high. So we've got higher highs on the price chart and higher highs on the relative strength index. And yes, it's overbought, but it can stay overbought longer than we can stay short. So don't read too much into that. If there was divergence, if we were to see divergence on here, then maybe I'd be a bit more reticent. We're not. We're seeing higher highs. So basically, the trend's your friend. As long as we stay above yesterday's low here at 280.52, we remain bullish on XRP. Now, if we were to fall through that low, we could see a minor correction. Do we have support somewhere around there? And can you see that low, by the way, was made around these highs that we made back in February. And that's why you look at previous highs, which can act because of inverse polarity as support going forward. And if we were to fall through that support area, where's our next support area? Well, we've got this high here from the 20th February high. That was made around 275. And then we've got this really important one here before the corrective move. And that was the May high, and that was around 265. But that's a long way away. So basically, if we were to consolidate, it's likely that we're going to stay above that high here. And if we were to come down, that high with all these highs here would probably act as support. So basically what I'm saying is, unless we have a major sharp reversal to the downside, which currently looks unlikely, the odds are that further upside is happening at the moment and may happen in the near future as well with regards to XRP. Now, the question on Bitcoin was, could we see a weekly reversal here? Well, don't read things into your chart is all I can say. Let's go onto the weekly chart and let's see what we're seeing at the moment. So at the moment, what we're seeing is this doji. And the doji, as we know, is basically where we open, in this case on the weekly basis at a certain level, make a high, make a low, and then more or less close the week around the same level. And that tells you there's indecision in the market. And it can lead to a top forming if the next week is then a negative week, which falls below the doji low. So what I'm saying is, if next week we were to close below this low here, then perhaps we could see a top forming here, but only then. And the danger with saying what I've just said is that we are looking at the weekly candle as if it's closed. The week hasn't ended yet. We have to look at a Friday close, and I know that Bitcoin trades 24 hours, Saturdays and Sundays as well. So where's your weekly close? So you need to look at your chart software, and usually it's a New York close in the US at 5 p.m., I believe, for currencies. For Bitcoin, to be quite honest, I don't even know, but because we're looking at it versus the US dollar, and Bitcoin is priced on this chart in terms of US dollar, I would use the 5 p.m. New York close there, so on Friday. So if then we have this chart pattern, then we can read things into that. But this chart pattern could turn into something like that, or something like this, or this, or this. So you don't know that. So basically, don't read anything into your chart, into your candle, and that doesn't apply just for cryptocurrencies, but for any markets, because these might change. So once this candle has closed, then you can analyze it, not beforehand. So just be very careful of that, because it's very easy to think, oh, this might happen, and this will happen, and this could happen, and so forth. And now, you see, talking about things happening, we've got a fire alarm. So that's funny. We'll see whether it's going to stop or not. I hope you can still hear me, because they're investigating an alarm. We had something like that last week as well, but luckily I wasn't live on the show. But let's continue the show. Let's look at Doge. And pardon? All good? Yeah, I'll carry on. I've just been told to carry on. I won't burn to death. Doge. Let's look at Doge. That's a new one. Thank you, actually. And let's see whether you can still hear me, because I can't hear the gallery, guys. Sorry. If you want to, Phil, what did he say? Keep going. Okay. So basically, Doge. Okay. We haven't analyzed Doge yet. So what do? As we know, we go back to the longest time frame possible. So here we go into the monthly chart, and we can basically see that we've had a lot of volatility back in February or May of 2021, when the all-time high was made. Then we've come off again. Then we had this support area here. Then we went higher, and then we came down again from the November 2024 high. And then we basically had this support line here. Can you see this orange line is the 55-month simple moving average? I personally use the 55, not the 50, what a lot of other people do, because the 55 is a Fibonacci number. So for me, that's a possible support area. So that held here, but it's a derivative of the price. So therefore, the price itself is more important. So what does the price itself say? Well, let's look at basically the support line on here. And we can see it's actually an uptrend line, right? So let me just change that to a solid line, because what we can see is 3 touching points. Can you see this touching point in August, September? We have another one in April, and then we had another one in June of this year. So 4 touching points. So it's a definite uptrend line on the long-term chart. So if we then go onto the daily chart, what we can see here is that we basically, with TradingView, need to just redraw it, because you want to make sure no data goes through it. And it's not that precise on the monthly chart. But we can see that we bounced off that low here, and we fell in 5 waves in Elliott wave terms. So 1, 2, 3, 4, 5. What we could perhaps see now is an ABC correcting to the upside, and then another move down, but we don't know. And any wave is quite complicated anyway, so let's ignore it for the time being. But what have we seen since the 23rd of June or 22nd of June low? Well, basically, we've seen a series of higher highs and higher lows. So Doge is looking more interesting from a short-term perspective, and could actually be heading up again. So what do I do now? So I draw in my resistance line. So in this case here, what I need to do is basically do this, a dotted line. And the alarm has changed, so I hope you can still hear this one. But, well, I hope you can't hear it, but I can hear it. But apparently I need to leave the building immediately, so I'll wait for the gallery to tell me. But anyway, we've got this resistance line here, only 2 touching points. And what I do now is to draw in another resistance line. But can you see here, we've got 3 touching points, 1, 2, 3. So I've just been told to evacuate the building, but you can see here resistance, and I'll just finish off very quickly because we might burn to death here. Basically, as long as we stay below the high seen on the 11th of July, we could come off with Doge. If we break above there, we could go higher, but then your stop loss would be below yesterday's low, because that's the last reaction low. So on that note, I leave you because I have to leave, sorry. And I won't see you next week or the week after, because I'm off on holiday. See you when I come back. Bye.
do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns, that's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to